Good morning. All right. 1 second, everyone. Okay. So, impressive comeback for the NASDAQ yesterday. Let's go through the rest of the markets. Good morning. Good morning. Spiders. Turning points are at the high are never easy. As I said, yesterday's. Cool. You're welcome, Robert. Yeah, the swing course is awesome. I had kind of more fun with that one, so to speak, having done the big course. And anyway, you'll see. If you've taken the big course, you see just the way I presented that one with some interaction with it with the lower thirds. Anyway, had a little bit more fun with it, but they're all great. But glad you're enjoying it. Send me a little note so we can post it for others to see. So this M top here was pretty much near perfect, with the higher high taking out this previous high there and then reversing. I guess ideally it would have closed further down where it was the low, but it did have the inside day in the 1, 2, 3 continuation, even though it didn't close at the low. So now this bounce up here is normal. Right, pretty normal. I mean, they don't always happen the same way, and you can see on the hourly chart now it's up into price resistance right there, where sellers should try and take control. This is where, if they're going to take control, this is the spot, right? Because once it gets here, it increases the probability of pushing all the way up. So we can see it was tested once overnight, pulled back, and now possibly we're going to get the M top over here and then the follow through lower. Now, with the Qs having the impressive day that it did yesterday, almost totally negating the prior weekly bar. Now, this is only Tuesday. We don't know what this green bar is going to look like. This might be a topping tail at the end of the week. And if it is, well, common sense says press the accelerator on the short side on the NASDAQ. And if this turns into a topping tail, the others are probably going to look worse. Now, the other side of that scenario is it doesn't. And it stays here all week and maybe pushes above that. And, as incredible as it would seem after this run and our internals having reached an extreme, both breadth and sentiment, breadth was, working its way lower and reached some support levels, but without sentiment there, we don't really pay too much attention to it other than to know historically that the markets will bounce. But in any event, if this was to close positively or above here, what would seem inconceivable to me, but I have to force myself to accept what is, that this could be meaning it's going to push to all-time highs. Now, a lot of times things are whippy and wild at a turning point. So we'll see how the next, days go throughout the week. But right now, the Qs are just hanging in there and buyers are taking control here in the moment. And those that are short early on at this point with a stop above here have to be a bit nervous. We'll just have to see how the other markets give it up here at the open. Possibly the Dow is looking a little weaker, which we'll get to. But the Russell had, pretty big move to the downside. That is obviously a larger red bar, came well down into near the support area. I've got 2 levels, but we've got that minor support here and that major support level pretty close together. And that's where it held last Friday. And now it's bounced up from there. And it's just hanging here, right? Well, it went a little bit higher. Now it's just hanging here. So, as we always do, we see how things unfold day to day, and we put together multiple time frames. So the 20 MA would be an initial resistance point. While subjective, it's widely followed. This is a simple 20-period moving average. and the resistance is up here. So we'll see what the reaction is. It's into what we call a void. There's no real resistance until up here. So the bearish scenario here would be it never gets there. Rather, it creates resistance. In other words, it chops around here today. And so this grayed area is what's happening pre-market and post-market. And so this bottoming pattern, see the sideways little time correction there, which was bullish, and then prices rallied, and then we had yesterday and so on. So now if it goes sideways here, that opens up the door to a move lower where it's created resistance rather than go to the actual resistance, and that would be bearish. So we'll see how this plays out today. Right now, I would think it was going to go up and test the 20, and then it could come up here, but we'll see as it unfolds. Anyway, a lot more bearish with this big bar here at that prior topping tail. It made a slightly new high, taking out this high, and then down. So suggests more downsides coming, and we'll see how that plays out. The transports, somewhat similar to the Russell, and that's often the case. It was last year, where they both lead on a way down, and they also tend to play catch up when they've underperformed. As the market starts to bottom out, they underperform, and then they begin to accelerate and catch up to their respective resistance areas. So now this pullback, same story. This one was deeper, all the way down to major support down here, and look for it to go up. It doesn't trade too much pre-market, but we'll see what happens here at around the 20 MA that is in alignment with this price resistance area. Diamonds weaker, but had a nice reversal day yesterday. Now, this was the first break off of the high, so it shouldn't be too surprising, I suppose, to see a bar like this on a turn, since, you know, buyers that were trying to get in along the way here and really not getting any pullbacks or any significant corrections. Well, here's the first pullback that was like, finally, my way in. But meanwhile, they're buying that first pullback after an extended run where the internals have reached an extreme. And I'll just peekable at those here. You can see breadth actually topped out over here. Well, that sentiment actually got to an extreme over here, and breadth was deteriorating, but it pushed up a little bit. And so that got near an oversold level last week. So here's the bounce. And yesterday, the wrong way option traders that were loading up here, you know, they saw the bullish activity in the market, and they started to step up again on the call side. Understandable, but we'll see if they got it right for a day and whether we can make some headway to the upside. In any event, when sentiment reaches an extreme like this, the correction typically is going to get a bit deeper, especially when we have weekly charts that look like what we have right now. S&Ps just kind of hanging there, backing off a little bit at resistance. So if you're bullish on the market and you got long yesterday, hang on and see if they can absorb this resistance and be able to get things going here to the upside. You know, stranger things have happened, and we'll see if that is what is in the cards. We could be looking at just a sideways consolidation day, and that would be kind of bullish as well, to say, hey, here was this big move. It's into resistance, and buyers continue to step up here. And so a 1, 2, 3 higher, maybe, where the 2-day is a resting day after a momentum day. And you say, well, why is one bar a momentum day? Because in a smaller time frame, you see that it went straight up. Right? So there's a void below. There's no support. So the number 2 day in a 1, 2, 3 creates the support, and that becomes the potential launching pad to push up. So don't be surprised if today ends up going to be a go nowhere day while the markets consolidate yesterday's gain. From a bearish point of view, you want to see this thing push deep into this red bar and possibly close down below the 50% mark of, the range of this bar. And that could suggest a continuation move lower down to this area here. Qs, wow, big move, negating last week's red bar in one day. We'll see how it plays out. So 1, 2, 3 here. It holds up here throughout the trading day. I don't know that I could press the button. I'm telling you the truth on a 1, 2, 3 continuation long on this setup, but that's what this would be suggesting. If we have that resting day and then it trades above here tomorrow, time will tell. Dow weaker here. Boeing pulling it down, as Dan mentioned. It's down about 11.5 as I speak. So pulling back here, and NASDAQ could go up without the Dow. Seen it happen before, where this lags, and then you hear the bears say, "Hey, you know what? Warning sign: Dow underperforming, transports underperforming, Russell underperforming," and all of that to be true. And so we observe intermarket relationships on a day-by-day basis, a week-by-week basis, and until things become obvious, meaning this was obvious it was going up, until it becomes obvious that it's going down, there's uncertainty about whether that is actually going to play out. And that is why turning points are more difficult than trending markets, that it's like, hey, it's going up. It's clear. Everybody can see that. And here, everybody can see it's starting to go sideways, but it's not going down yet. You accept that, and you either stand aside or you do things on a shorter term basis. Bottoming tail bar in bonds. And I like these where they take out the lows and come right back again. That suggests it's going to go higher. And if that's going to go higher, interest rates are going to go lower. And at some point, that inverted yield curve conversation is going to start, because it's getting closer. It's not there yet. Gold consolidating here, and it's got to make its move here today or tomorrow, or that is going to become in question as to whether it can really pop higher. And lastly, crude oil, which leads me to think, as I said in Monday's letter, that this crack in the energy ETFs were related more to the market. And I hate the weekly, but oil is holding up here. And we have to consider whether we should be buying these, even though they broke down, which is not the ideal scenario, of course, after a break. But this one especially is here near price support, and it's got to get through that, which means it's not going to be some kind of a momentum move. You have to be more patient with it to see what it does when it gets there. But as mentioned, this chart of crude oil, these are the futures with that bottoming tail shakeout and move back up, indicates this is going higher. And if crude oil is going higher, logically that supports energy stocks being supported and going higher. So that's it on the broader markets. I'll leave it to Dan with the gappers and open positions. All yours, Dan.
All right, thanks. Good morning. Yeah, we picked up a number of longs yesterday. We'll keep a tight stop on them. Our opens here, Echo Alpha. You don't hear me now, Greg? Sound check, please. Is Gustavo? Is it? Greg, is it just you? Yeah, it's you, Greg. All right, thanks. Echo Alpha put spread in both letters. AGN, a put spread and a covered call. We tightened stop yesterday. Netflix, a call spread, gapping down a little bit. We need that ice cube to melt for Friday. Google, we did not get filled on a put spread yesterday, but that looked great. Remember Apple, we were also stocking yesterday. Missed my morning entry, it's gapping up here. 65 cents. Kellogg gapping down. I just, oh, well, let me give it to you all too. For those of you who don't get our letter, we're going to go ahead and cover a third here, pre-market on a gap down on Kellogg. VMC, a new addition yesterday. We legged into a covered call after it triggered and then lost momentum right here on this breakdown. So that was a perfect time to leg into a covered call, reduce our cost basis. LYV, a new addition yesterday, looks great. HCSG, we're short the stock, no changes. CCI, a new addition, we found that one right at, well, we found it yesterday morning scanning. Look at that beautiful 15-minute chart. And we bought an afternoon breakout. DTE, another breakout that triggered. Lulu, we have a call spread. Had a deep retracement yesterday, but the calls are way the heck up here, 152.5. So nothing to do with it now. Tyson, we have a covered. No, we just learned long stock. There wasn't enough juice to do a covered call, but nice engulfing yesterday. Bullish weekly, hopefully it can get off the ground. Triple V, we're short stock. You can add to that under yesterday's low. KHC, we're still short stock with a tight stop. UGA, the gasoline, we're trying to sell a put spread, but with the gap up, we didn't get filled. And that's it. On opens, let's look at a couple here. Trader, this was yours. Garmin, I put in the minder. Beautiful strength here. Reversal bar yesterday. A nice 15-minute chart. Let's keep an eye on that for stock and option trades. BPTH, this morning it was gapping up. Yeah, look, this morning it's gapping up to 46 bucks. I don't like the way that trades. And Trader, I'll go through the other ones of yours here in a second too. We got time. Momo 35.71, bullish cap, but to resistance. We'll keep an eye on that for a 30-minute high. DKS earnings 35.66, bearish gap. Keep an eye on that. SFIX 35.40, bullish gap, but too excessive. We'll watch that on a pullback. And that's it. Facebook had a weak close. Yum, this was on my long list from the weekend, and it just took off yesterday. FND I had on my list yesterday, had a nice close. Costco's been a beast. Now it's too extended for me for a swing trade, but keep it here as an idea for a day trade. We're out of all our pot stocks, big trading range here, but it's holding up. Tilray's been the dog ear one of the whole sector. Tesla, I guess Elon Musk still messing around with the SEC. Nothing to do there. ACB actually holding up well. It stopped us out with our tightened stop here on this deep pullback. But I'm going to keep them on our list. Amazon, rangebounds. Microsoft, good day. Intel, NBEV. All right, that's it. Don't have much today. SFIX. Yeah, it has a void on the weekly, but it's $34. You know, look at the picture on the daily. When this prints the opening print and the screen readjusts, it's going to be a big gap. So we're just going to apply our normal gap rules like we do every single day. All right, Paul sent me NVIDIA. Yeah, that was strong yesterday. This could be building a nice base to break out on the weekly. Yeah, I like the weekly bottoming action. Yeah, let's keep an eye on that for sure. All right, Paul sent me a couple of charts. Let's look at them. CDW. I don't know what to do with that. You know, it's deep into resistance here. FSCT. Let's see, that one's better because it has less resistance to the left. It's stronger on the daily, weekly, monthly. Now this weekly is climactic. Look at the beautiful 2-bar 180 shakeout at the bottom. Wow, and then you got kind of a reverse head and shoulders here, breaking out right here. That was a beautiful pattern. But that one's worth putting here. Hey, Greg, Gustavo told me that plane that crashed yesterday, the co-pilot only had 200 hours of experience.
Who put him in the seat?
What?
But who put him in the seat? I'm not familiar with the plane that crashed, but if
well,
it's a major airline.
Right, of course. The airline did it. I mean, it's the difference between being licensed and he's legal to be it. You know, you got to get, what's called a checkout on that type airplane. But, you know, you would think they would have more experience. It's like, it's like you putting, a brand new student in charge of your portfolio. Do you feel comfortable doing that? All right, FTV, too much resistance right there. Garmin was on your list. I like that one. HRS, there's resistance to the left. I mean, these things have to go. It's still a bullish weekly, but it has to go sideways for a while. You know, I'm only looking for tier 1 setups right now. I still like Garmin better than this. I mean, it had a deep pullback here, bottoming tail. It could be a day trade, but compare this to Garmin. See, this one's so much more controlled. Yeah, Fabio, yeah, that's what we're talking about, the India thing. PCAR. Yeah, I mean, put it on your list. That's not bad. I kind of don't like all this sideways mess right here, but it's, it's deep into it. So if you drop down to an hourly chart, I'd like it to go sideways more. And now the market's overbought more than it was yesterday, right? So it's, we nailed a number of longs yesterday, but it's going to be harder today. Harder. RNG, I have zero interest in. Rallied right to resistance. Look on a hourly chart. You're going to have a wall of resistance on the hourly right there. SSNC, no interest. I don't think that tail is real. But, resistance. Now, some of these, don't come back to me in a week and say, oh, look, Dan, you said you had no interest. Well, that's right. I got no interest today. And you got to limit, what you watch. And, like NVIDIA and your Garmin and your FCST, those warranted me putting them in the watch department. But some of these other ones, I can't be bothered with watching 3,000 stocks unless you just want to set an alarm. UTX, I got zero interest